stop for a second. Seriously. Because moments like this don't announce themselves twice. If you blink right now, you'll miss the point where the entire money narrative quietly turns upside down. Silver didn't just climb, it leapt. It moved with intent. And if you're still telling yourself this is just another routine rally, you're playing a simple board game while someone else is rearranging the rules entirely. Before we go any further, quick housekeeping. This channel has over 1,000 members who receive members-only videos, early access, and daily updates so they're never reacting late. If staying ahead instead of catching up matters to you, consider joining. The link is in the description, or you can tap the join button below. It takes less than half a minute. Now listen closely. We're also kicking off a straightforward giveaway today, 20 ounces of silver. To enter, like this video, subscribe, and leave a comment either naming your favorite form of silver or your price outlook for the year. That's it. At the end of the month, we'll choose a winner live and announce it on camera. But let's be honest, the giveaway isn't the point. The point is this: when silver prints triple-digit prices while daily life still feels normal, that's not entertainment. That's a warning label. Your grocery receipt still looks familiar. The stock market still acts invincible. Most people are walking around as if nothing fundamental has changed, and yet something has. Based on the latest market data, silver is hovering around the $150 level after pushing even higher during the session. Gold is sitting above 5,200. Read that again. That's not a typo. That's a flare in the sky. So the real question isn't whether silver went up. The real question is why it moved like this before any obvious crisis showed up on the evening news. Hold on to that thought. In a moment, I'll share the one clue nearly everyone is overlooking. And that clue determines whether this is just a short-term spike or the opening chapter of an entirely new era. Before we dive in, check the description. There are bonus links there, including access to a premium WhatsApp channel and membership options. Premium members get exclusive content created by a separate research team. Deeper dives, tighter structure, more detail. That matters because the coming months won't reward people who react emotionally. They'll reward people who prepare quietly. All right, let's talk about what actually just happened. Without hype, without panic, and without the lazy to the moon nonsense. I spoke with a close friend of mine, someone who focuses on how money systems work, not just price charts. The first thing I said to him was, "Tell me I'm wrong. Prices are exploding and I still feel uneasy." He laughed, but it wasn't a joyful laugh. He said it feels like watching storm clouds roll in while everyone else is laying out picnic blankets. Because when silver goes vertical, it's not silver winning, it's the currency losing. That distinction is uncomfortable, and a lot of people still don't understand it. If silver hits 150, but your rent doubles, your insurance triples, and your paycheck buys less every month, did you really win? Or did you just manage to tread water? That's why I keep repeating this. Don't fixate on how many dollars your metals are worth. Pay attention to what your dollars are becoming. And right now, the dollar is shrinking faster than most people realize. According to publicly available policy schedules and filings, the central bank is sitting in that awkward middle zone. Rates high enough to strain the system, but not high enough to reset it. Pressure without release. They tighten just enough to cause fractures, then act surprised when something breaks. We talked about what would make this feel like the true endgame. His answer was simple. You'll know it when the next full-scale rescue arrives. Not a quiet liquidity tweak, not a technical adjustment. I'm talking about the moment rates get slammed back towards zero and fresh trillions flood the system because the financial plumbing starts clogging again. That's when the calm facade disappears. Here's the part that should bother you. Silver just made a move that usually happens after that kind of rescue. So why is it happening now? That's not a rhetorical question. That's the question that should keep you alert. Because if silver is moving ahead of the bailout, it suggests the people closest to the pipes are seeing stress before the rest of the crowd notices. No, that doesn't mean the world ends tomorrow, but it does mean the risk gauge just jumped. Now let me challenge something you hear often in precious metal circles. People say paper metals don't matter. Only physical counts. Derivatives go to zero. Here's my honest view. In a true breakdown, counterparty risk becomes massive. A promise only has value if the system enforcing it still works. That said, markets can function longer than people expect. Paper exposure can still act as a bridge. So this isn't a one-size-fits-all sermon. It's a call to understand what you own, why you own it, and what conditions must exist for it to behave the way you expect. Physical metals represent sovereignty, something you can hold. Paper exposure offers liquidity and flexibility, until it doesn't. The danger isn't owning an ETF. The danger is believing an ETF is the same thing as metal in your hand. They are not interchangeable. And the faster prices move, the more that difference matters. Then my friend said something that hit hard. He said, "This is separating the investors from the exit planners. That's the cleanest way to frame it. Some people buy metals to grow balances. Others buy metals because they no longer trust the measuring stick. When that measuring stick starts bending, the second group stops caring about daily quotes. They start counting ounces like lifeboats. But even if you're in that second camp, you still face volatility. Silver doesn't rise like a staircase. It moves like a malfunctioning elevator. Up fast, down hard, then up again. A sharp correction wouldn't surprise me at all. In fact, it would feel normal. What matters isn't whether a pullback happens. What matters is what follows it. Some corrections are pauses, others are final invitations, and you only know which one it was after it's already passed. Now let's address something that confused many people. Why are there different prices depending on where you look? People kept messaging me saying the screen price says one thing, but real-world physical silver costs more. So I asked him directly, is this a shortage? Is the market breaking? He explained it simply. There aren't just one, but multiple silver markets that behave like one when times are calm. When stress appears, they drift apart. There's the retail coin market, people buying silver they can hold. There's the industrial market, manufacturers needing specific forms of refined silver. And there's the futures and warehouse market, contracts, inventories, delivery rules. In calm times, these lanes move together. Under pressure, they separate. An industrial buyer can't show up with random coins and make components. They need exact purity, exact form, reliable delivery. So even if retail premiums look manageable, industrial premiums can spike. And when factories compete for supply, they'll pay whatever it takes. Because the cost of shutting down is worse. That's how you end up with one price on a screen and another price in reality. And when those prices diverge, it's a sign the system is under strain. Here's the cliffhanger. When people learn at scale that quoted prices don't always equal reality, money psychology changes quickly. That's why I watch behavior, not headlines. So is this the end game, or just a preview? My friend leaned toward preview. The public isn't panicking. Shelves aren't empty. Prices aren't repricing daily at checkout. There isn't a mass rush into durable goods. So why is silver behaving as if those things are already happening? That's when he said something that stuck with me. If silver can do this while the public is asleep, he said, imagine what it does when they wake up. That suggests what we're seeing may not be the main event. It may be the trailer. Now, to stay grounded, let's talk about what could cause a pullback. When prices explode, large players scramble. Some buy out of necessity, some buy out of fear, but many of them still have dollar-denominated debts. When financial conditions tighten, those debts demand dollars. That can force even silver believers to sell silver to raise cash. Not because they hate it, because the system demands it. That's how violent dips happen. And that's why anyone telling you it only goes up is selling comfort, not truth. I don't know the exact top or bottom. Nobody does. What I can do is outline the logic. A weakening currency system increases the value of real assets, but the path is chaotic. So how do you navigate it? You stop treating metals like lottery tickets and start treating them like insurance. I asked him what someone new should do if they feel late. His advice was boring, which is why it was good. Don't time perfection. Start with a base position. The goal isn't a perfect entry. It's not being empty-handed during a seizure. Once you've built that base, stop staring at prices. Build your life, build skills, build income. Obsession turns preparation into panic. Let me add this. Don't let triple-digit prices trick you into thinking silver is expensive. Price and value aren't the same. A high quote can reflect a sick currency, not an overpriced metal. Ask yourself what problem you're solving. If it's currency erosion, the real question is whether those policies are stopping. And recent data suggests confidence isn't exactly strengthening. Gold above 5,200 isn't normal. Silver around 115 isn't normal. The mismatch between market behavior and public mood is what makes this explosive. The gold to silver ratio has been compressing. Silver outperforming gold. That can happen for many reasons. But ratios aren't prophecies. They're thermometers. Now a quick story. He talked about buying silver in the 20s and watching it do nothing for years. That's the part nobody wants to hear during mania. Patience. Preparation looks boring until it looks brilliant. If you're here because silver is trending, fine. Just don't disappear when it stops trending. That's often when real positioning happens. Now let's talk real-life impact. When metals surge, it often signals trust breaking down. Trust in purchasing power. Trust in discipline. When that trust breaks, behavior changes. So I'll ask you, are we early or are we late? And if silver pulled back 20-30%, would that feel like disaster or opportunity? Silver is both monetary and industrial. Two engines pulling at once. When both rev, prices don't glide, they snap. If you're feeling FOMO, pause. Define your allocation, your timeline, your exit rules. Without that, you're gambling. Endgame isn't a date, it's a sequence. Crises, patches, calms, each one bigger. Currencies rarely die all at once. They fade in episodes. Not every spike equals collapse. Sometimes markets run ahead of policy. Respect the signal, but don't let it hypnotize you. The clue isn't just price, it's timing. Metals are acting like a pivot is near. Markets move before press conferences. Waiting for pullbacks can turn into paralysis. Consider scaling, not a guarantee, a tool. There are two ways prices get too high. Assets overvalue or currencies devalue. Most people miss the second. If silver hits these levels without panic, imagine the reaction during the next banking scare. Complexity is a multiplier. If you're new, keep it simple. If you're emotional, step back. Markets shock, bore, then shock again, transferring assets from impatient hands to patient ones. Here's the summary. Silver isn't rising because silver changed. It's rising because trust is eroding. Markets may diverge. Corrections are normal. Timing suggests policy stress ahead. If you're anxious, turn it into planning. Budget. Reduce bad debt. Build reserves. Strengthen foundations. You're not buying a lottery ticket. You're buying optionality. Watch the central bank. Watch the dollar. Watch premiums. Watch behavior after pullbacks. Plan your position so you can sleep. The message isn't the price. It's that old rules are quietly being rewritten. First in markets, then in headlines, then in daily life. Understand that sequence and you won't panic. I'll see you in the next video.